I gotta tell you something, Rachel, all right? It's not intended to be mean. I have a purpose. You don't. And if you think that's some sort of blessing, it's not. It puts me at a huge life disadvantage. It means I have an obligation to see a very specific thing through. And with that obligation comes sacrifice, okay?
And what do you plan to do if this whole dream of yours doesn't work out?
That doesn't even enter my consciousness.
tremendous respect for your money, and I know it's hard to believe, but I'm telling you, this game, it fills stadiums overseas. And it's only a matter of time before it fills stadiums in the United States, too, before I'm staring at you from the cover of a Wheaties box.
Alright guys, let's get talking here. Let's see how we can do this here. Alright, let's take a look at news here first. Let's look at what's happening both in the US news markets, then we'll look at regular markets here. Okay, today we had New York, Empire State Manufacturing. Really good for stocks. Really good for stocks as well in that correlation. Tomorrow we have want to see something. I want to correlate this to Forex Factor. Just 1 second. Yeah, nothing really like hot. Even here, like we have FOMC meeting in minutes. I just want to see this here. This is the only big news. This week is slow. This is a very slow week. What? This is a slow week with news here. Let's see what the FOMC meeting in minutes does.
This week, we'll get a detailed look into the thinking of the Federal Reserve when it comes to its latest interest rate decision. The minutes from last month's FOMC meeting will be released, Carol, on Wednesday.
Yeah, a lot of questions coming off of the press conferences, right, with the Fed chair. Hey, last month's decision not to raise rates saw a rare dissent from 3 regional bank presidents. Well, joining us right now to make some sense out of it all is Jennifer Lee. She's senior economist at BMO Capital Markets. Jennifer, good to have you here with us. This is a focal point in this new era of the U.S. Central Bank. What are you watching out for when it comes to the FOMC minutes?
Well, good morning, and thanks for having me on. You know, it'll be very interesting to see how much of a, I'm going to use my air quotes here, the good family fight really took place behind the scenes. I would love to be a fly on the wall on that front. And this will be the interesting one because, you know, this is like the second meeting that Fed Chair Warsh chaired over. The first one, everyone was unanimously behind him, supporting him on the decision to stay the course. And then the second one, boom, 3 dissenters. So it'll be very interesting to see what kind of discussion went on behind the scenes. And then, of course, how much of it will heat up in the coming months as well, just given all the mixed data that we've seen of late.
We've seen a big move in interest rates, and there was quite the freak out in the markets following the most recent meeting that we'll be reading into in these minutes. Jennifer, when's the 10-year going to hit 5%?
Oh, that's a great question. I wouldn't be surprised if it's, you know, sooner rather than later, just
Really?
given the upward pressure. Yeah, just given the upward pressure that we're seeing overall, like worldwide as well. Just, you know, more demand, I think, for just to spend more as well. So anyway, we're going to have to see how that fares, see what other banks around the world are doing as well in terms of what their holdings of treasuries are. You know, China's been ramping them down or rating them lower, I guess. You know, so, I mean, again, it's all going to depend on how, you know, what other central banks are doing, what other economists are doing, and what inflation expectations are doing around the world as well.
So, you know, the thing that has kind of freaked out investors,
Okay, so I don't even really want to take a look at that. To be honest, screw that. Let's just look at this here. And to do this in a quick summary here, because I'll be here all day trying to listen to that. Let's look at FOMC meeting in minutes here. We can kind of get a summary here from X. And then what we'll do is we'll check the rates here, and this has been updated as of 5 o'clock today. We are holding, and a 25 basis point hike has already been getting priced in for December. Interesting. Let's look at the heat map and probabilities. 70% chance. There is a higher chance, though, next month that we do hike more than normal. 45% chance in December of a hike possible, but we have a huge shot next month in September here, guys. Actually, I mean in October. There is a shot that we might have. You know, we might stay the same, but I mean in December here, a hike, right? So it's not good. It's not good at all. Let's see this here. The tone for markets.
The Fed's implicit inflation target have left a mistaken impression that's hard to shake, that the Fed's implicit inflation target was somehow above 2%. Let me reiterate, there is no soft inflation target. There is no soft implicit target, not on this committee's watch. There's only a target, and it's 2%. Not one of my FOMC colleagues is under any illusion. We have begun a new chapter, and we understand that the 5+ years of inflation above target cannot be cured in 9 weeks, or by a single month of modest price decreases. This Fed will not waver. Our credibility rests on performing our duties and delivering on our responsibilities. Americans are right to expect that, because our nation's population have left a mistaken impression that's hard to shake, that the Fed's implicit inflation target was somehow above 2%. Let me reiterate, there is no soft inflation target. There is no soft implicit target, not on this committee's watch. There's only a target, and it's 2%. Not one of my FOMC colleagues is under any illusion. We have begun a new chapter, and we understand that the 5+ years of inflation above target cannot be cured in 9 weeks, or by a single month of modest price decreases. This Fed will not waver.
Of their yield curve, and Treasury Secretary Scott Bessent
This is the last video I'll check out on this, and then that's it. I'm not looking at this again.
Of their yield curve, and Treasury Secretary Scott Bessent came out, I believe, a few days ago, basically reiterating that the U.S. is here to support Japan in their efforts to manage this bond situation they find themselves in.
Yeah, and I think this is directly related to the move curve, the move chart that we were showing, because this is like, on the margin, one of many little tools to kind of backstop that, the volatility in the bond market. I guess logic being, right, that this is a few weeks ago, but the USD JPY cross kind of blowing out to 40 to 50 year lows, and needing some sort of response to kind of defend the currency from the BOJ and the Japanese government. One of the obvious ways you could see Japan moving on that and dealing with it is tapping into its, I think it's 1.2 currently trillion of Treasury reserves, U.S. Treasury reserves. And so we've seen other situations like this in the past with, levered hedge funds in the U.S., right, who, or banks or, large corporate counterparties who can come and, instead of just outright selling treasuries to raise dollars, or in Japan's case, to defend the yen, you can come and get basically tap into this repo facility, some kind of repo facility, to access value against the collateral of those treasuries, instead of outright selling them. So it's kind of a win-win for both sides. And we've seen iterations of that trade before. And this is just I believe the first time that this has happened in this incarnation with.
Okay, so let's do this. Because they all believe the thing is breaking, the system is breaking, I want to show you guys something that I saw. I was seeing this on X the other day. I don't know how true this is of news, but I'm going to see how true this is. This is what I thought was interesting. And this has been happening recently. And there will be signs, right? Amex is apparently, slashing credit access across the board. Even with people with its highest FICO client base in the industry. Which is crazy. It's nervous about borrowers. The last time this happened was in 2007 and 2019. That's pretty fucking crazy, guys. It's cutting limits of most people. It's spreading around the internet right now.
He's getting and you have an American Express card, you'll know real soon. Because folks, American Express has came in and just cut credit lines like you wouldn't believe. Now, I am a since 1982, 44-year user of American Express. Even the American Express Platinum card that I pay $895 a year for, because it was an unlimited credit line that I could use however I needed. Always paid my bills, never been late, nothing. I have more income than I've ever had. And I can't use my American Express Platinum card the way I used to, because they cut it to where it used to, I mean, I could spend $100,000 and they wouldn't say anything. I tried to spend $5,000 and I got a call saying that they had reduced my credit line. And I'm like, exactly why? They said, well, it's a systematic thing they're doing because of just the credit market. It's just an update. Well, folks, it's because people aren't paying their bills. That's what's going on. I've always paid mine. I have good credit. Never late. But American Express, and that's just one credit card company, because folks, it's happening over and over again, to where there's accounts that you have for 20-something years, and all of a sudden, they just cut your balance like you wouldn't believe. So folks, American Express is at it, and I'm sure other credit card companies are. But
Interesting, okay? Let's get into the fundamentals here after watching that here. Dixie, the dollar index, still continues to be on this little, I would say, small compression. Order flow, right? Has it completely destroyed structure? Not yet. It hasn't. It's swiped liquidity, but it looks like it is swiping liquidity to then make a move to potentially the upside. Okay, let's go look at Dixie now and see how Dixie's reacting, okay, to some of this news. Let's look at SPY. SPY is still bullish here. Huge pullback on SPY. Huge pullback on SPY. Let's look at what happened here. This pullback happened the other day that we called out. Boom. Mitigation here. This literally happened on Friday. Mitigation here. Perfect. Entry and exit given out correctly. These are still targets here. Okay, these are still targets, guys. But obviously, this is an old trade now. I want to see how price reacts here. The reason why is because we're at a structural point right now. Did we break structure is the $1 million question. No, we didn't. What does that mean? This thing's gonna come back up. The sell-off will happen most likely here. This is a sell zone here. So expect a sell-off for internal structure to start here. A retracement to come. Probably back into this zone here. That's what I'm looking at. Price to retrace here. Most likely as a buy tomorrow. FOMC will be dramatic. If price does close below this particular zone here, price will break structure and come back down to these lows. In that case, to be honest, this looks like a lot of momentum. This would be a selling zone. It's honestly at a buying zone, even though it has a lot of selling pressure. Just like it did here, right? Buy, sell off, sell off. Broke zone, coming back to what? the Dow Jones. You know why price is falling though, right? Price is falling because of one core component, right? Oil. Oil is still rising. It's still going higher. And markets are pricing that in. Markets are afraid of that. Oil still has to fill this gap. And this gap. You're going to see oil start to move higher. As you start to see oil move higher, prices and indices will continue to keep dropping, you know? Russell and tech are still technically on an uptrend, so I'd buy. US 30 looks like it's getting ready for a buy this week. SPX looks like it's a nice pullback. All of this will be dictated by what happens on Wednesday, right? So if Wednesday's news is more bullish than expected, we should expect markets to rally. Make sense? Holy shit. That is not good. Thirty-year yields keep going higher. That is not good at all for markets. That is like really bad. We're on the premise of a very, very crazy fucking market, guys. Oil moving higher while 30-year yields increase the way that they increase. Something's going on and no one's talking about it. And gold on this parabolic rally. Gold this week, guys, all buys, right? Buy here, and even a buy here. The other day, I called some buys around the zone. So, I think we're going to see a parabolic run with gold. Again, I think this was a small pullback. I think gold tomorrow is going to be at 55.50. This thing just broke above structure on the daily. This thing is not, it's not stopping. Any pullback I can get with gold, I'm taking it for sure. I've been sniping gold all month. Literally just trading smart money with VWAP. Very, very simple, right? Not too complicated. Even here. Not too complicated, guys. Let's look at USD CAD. I haven't traded USD CAD since the last buy that we had over here.
$1,500, not including airfare. I need to focus
on this pullback. Yeah, this is gonna dump because oil is running again. This is a future sell. For sure. Sell off. Oil affects Canadian dollar, increases, and then Dixie moving to the downside is pushing all of this now. Interestingly enough, USD JPY has been somewhat stable. Will it break through though? I'm so glad I took out of Bitcoin. Like, I was in sells here again and more sells here. But I'm out now. It's just playing too much. That's the problem. It's getting ready for... It's getting ready for another sell, but I was swinging it for so long that swaps were getting too expensive for me to hold, so I just took profit. It's still a long-term sell. BTC will probably drop about a solid 10% from here, probably hit 58, 55. I still believe that. 55 is still the target for me. And then after that, we'll probably start accumulating again. I truly believe that. All right, guys. We will be trading live tomorrow, so I will be going on this session and obviously giving out some trades here. Most primarily with gold. Gold's been moving, so I've been taking more gold trades. But other than that, today looks kind of interesting, and we'll go from there. All right, guys. Appreciate y'all. Love y'all, and I will talk to you soon. Have a good one, guys. Peace.